Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Please subscribe to the channel and also please do like and share and leave your suggestions in the comment section. Today I am going to talk about the Master Circular on conduct of government business by agency banks, payment of agency commission. Source RBI website. Bank of India is offering this facility. Introduction. The Reserve Bank of India carries out the general banking business of the central and state governments through its own offices and through the offices of the agency banks appointed under Section 45 of the RBI Act 1934 by mutual agreement. Reserve Bank of India pays agency commission to the agency banks for the government business handled by them. Government transactions eligible for agency commission. Transactions relating to the following government business undertaken by agency banks are eligible for agency commission paid by Reserve Bank of India. Revenue receipts and payments on behalf of the central or state governments. Pension payments in respect of central and state governments and any other item of work specifically advised by Reserve Bank as eligible for agency commission. Agency banks also undertake the work related to small savings schemes (SSSS), the commission for which is borne by Government of India. Though the settlement of commission on such SSSS is processed by RBI and settled at Central Accounts Section (CAS) Nagpur, the rates of agency commission related to small savings schemes transactions are decided by Government of India. Agency commission claims on special deposit scheme related transactions where mirror accounts are maintained in RBI are also settled at CIS Nagpur. Short-term, long-term borrowings of state governments raised directly from financial institutions and banks are not eligible for agency commission as these transactions are not considered to be in the nature of general banking business. Reserve Bank pays the agency banks separate remuneration as agreed upon for acting as agents for management of public debt. Whenever agency banks collect stamp duty through physical mode or e-mode, challan based, they are eligible for payment of agency commission, provided the agency banks do not collect any charges from the members of public or receive remuneration from the state government for doing this work. If the agency bank is engaged by the state government as banking vendor and it collects stamp duty from the public for banking the documents, it will not be eligible for agency commission since the state government is paying commission to it as banking vendor. However, the agency bank which collects the stamp duty paid by the banking vendor for credit to the treasury through challan in physical or e-mode or for purchase of the franking bar would be eligible for agency commission since it is a regular payment of stamp duty as stated above. Agency banks paying their own tax liabilities through their own branches or through authorized branches of any other agency bank, including State Bank of India or offices of Reserve Bank of India, wherever they do not have their own authorized direct tax collection branch, should indicate the same separately in the scroll. Such transactions will not be eligible for payment of agency commission. Banks should furnish a certificate to that effect that own tax liabilities, TDS, corporation tax, etc., paid by them have been excluded while claiming agency commission. Government transactions not eligible for agency commission. The following activities inter alia do not come under the purview of agency bank business and are therefore not eligible for payment of agency commission. Furnishing of bank guarantees or security deposits, etc., through agency banks by government contractors or suppliers, which constitute banking transactions undertaken by banks for their customers. The banking business of autonomous or statutory bodies or municipalities or companies or corporations or local bodies. Payments which have been classified as capital in nature by government to cover losses incurred by autonomous or statutory bodies or municipalities or corporations or local bodies, etc. Defunded schemes which may be implemented by central government ministry or department in consultation with CGA or a state government department through any bank. Transactions related to gold monetization scheme 2015. Transactions arising out of letters of credit or bank guarantee opened by banks on behalf of ministries or departments, etc., do not qualify for agency commission as RBI only reimburses the paid amount to the banks based on the mandate received from the governments. Any other item of work specifically advised by Reserve Bank or central or state government as ineligible for agency commission. Agency banks are advised to meticulously follow instructions issued by Reserve Bank of India from time to time regarding transactions which are not eligible for agency commission and submit their claims for agency commission accordingly. All agency banks, while claiming agency commission, should certify that no claim of agency commission is made on ineligible transactions. Reporting of transactions by agency banks to Reserve Bank of India. After the operationalization of NEFT 24 into 7 and RTGS 24 into 7, agency banks authorized to collect goods and service tax, GST and direct taxes under TIN 2.0 channel shall upload their luggage files in RBI's QPX or eKuber on all days except the global holidays which are January 26, August 15, October 2, all non-working Saturdays, all Sundays, and any other day declared holiday by RBI or government transactions due to exigencies. It is to be ensured that these luggage files are uploaded in RBI's QPX or eKuber on or before 1800 hours prescribed by Office of the Principal Chief Controller of Accounts, Central Board of Indirect Taxes and Customs, and Office of the Principal Chief Controller of Accounts, Central Board of Direct Taxes. No extension in cut-off time will be allowed to agency banks by RBI beyond 1800 hours for uploading of these luggage files in QPX or eKuber. State government transactions, electronic as well as in physical mode of previous month reported after 8th of the succeeding month and those pertaining to earlier months should be reported to Reserve Bank of India through a separate statement for accounting after being confirmed by the competent authorities of concerned state government. Central government transactions, electronic as well as in physical mode or any other adjustments thereof, if reported after a gap of 90 days from the date of transactions, agency banks have to obtain prior approval from concerned ministry or department and submit the same to Reserve Bank of India separately at the time of reporting such transactions for settlement. Dates for agency commission. Types of transaction is receipts, physical mode, rupees 40 per transaction. E-mode receipts, rupees 9 per transaction. Pension payment, rupees 75 per transaction. Payments other than pension, 6.5 paisa per rupees 100 turnover. In this context, the receipts e-mode transactions indicated in the above table refer to those transactions involving remittance of funds from the remitter's bank account through internet banking as well as such transactions which do not involve physical receipt of cash instruments at all. For example, challan generated electronically and submitted to agency bank along with cash or instruments should be treated as transactions under physical mode. With reference to the implementation of GST regime, it is advised that a single common portal identification number (CPIN) processed successfully, leading to generation of a challan identification number (CIN) under GST payment process, may be treated as a single transaction, even if multiple measures head or sub measure head or minor head of accounts are credited. This means that CGST, SGST, IGST, and sales, etc., paid through a single challan would constitute a single transaction. Thus, all such records clubbed under a single challan, CPIN, have to be treated as a single transaction for the purpose of claiming agency commission effective from 1st July 2017. Similarly, in case of transactions not covered under GST, it is emphasized that a single challan, electronic or physical, should be treated as single transaction only and not multiple transactions, even if the challan contains multiple major head or sub-major head or minor head of accounts that will get credited. Therefore, records clubbed under a single challan processed successfully have to be treated as a single transaction for the purpose of claiming agency commission. Agency banks would be eligible to claim agency commission for pension transactions at the rate of Rs 75 per transaction only when the entire work relating to disbursement of pension, including pension calculation, is attended to by them. If the work relating to pension calculation, etc., is attended to by the concerned government department or treasury, and the banks are required only to credit the amount of pension to the pensioners' accounts maintained with them by single debit to government accounts, such transaction is to be categorized under other than pension payment and would be eligible for payment of agency commission at the rate of 6.5 paisa per rupees 100 turnover with effect from 1st July 2019. The number of transactions eligible for payment of agency commission should not exceed 14 per pensioner per year. This includes one monthly credit for payment of net pension and a maximum of two per year for payment of arrears on account of increase in TRS relief, if applicable. Cases involving payment of arrears on account of late start or restart of pension qualify as a single transaction for claiming of agency commission. In other words, any payment of arrears on account of late start or restart of pension should be treated as a single credit transaction and not as separate monthly credits. Agency commission is payable to an agency bank at the full rate provided the transactions are handled by the bank at all stages. But however the work is shared between the two banks, the agency commission is shared between the banks in the proportion of 75 is to 25. Thus, broadly, the agency commission is payable to the agency banks as detailed below. At the full rate in cases where the transactions are handled by the bank at all stages, that is up to the stage of dispatch of scrolls and challans and checks to the pay and accounts offices and treasuries or sub-treasuries. At 75% of the applicable rate, where the dealing branch is required to account for the transaction by passing on the scrolls and documents to the local or nearest branch of Reserve Bank of India or by any agency bank conducting government business. At 25% of the applicable rate in the case of agency branch which received the scrolls and documents from dealing branches of other banks and is responsible for the accounting of these transactions and dispatching of the scrolls and documents to the pay and accounts offices, treasuries, etc. Agency banks are required to submit their claims for agency commission in the prescribed format. GST details to CIS Nagpur in respect of central government transactions and the respective regional office of Reserve Bank of India for state government transactions. However, the agency commission claims with respect to GST receipt and transactions related to direct tax collection under 2.0 regime and transactions pertaining to collection of indirect taxes through ICE Gate, a payment gateway reported to Mumbai Regional Office RBI will be settled at Mumbai Regional Office at Reserve Bank of India only, and accordingly all agency banks authorized to collect GST and direct tax collection under TIN 2.0 and indirect taxes through ICE Gate Payment Gateway are advised to submit their agency commission claims pertaining to the respective received transactions at Mumbai Regional Office only. The agency commission claim for central government transactions reported to CIS Nagpur RBI will be continued to be settled at CIS Nagpur RBI. Formats for claiming agency commissions for all agency banks and separate and distinctive set of certificates to be signed by the branch officials, the chartered accounts or cost accounts are given in respectively circular and research. These certificates would be in addition to the usual certificate from ED or CGM in charge of government business to the effect that there are no pension arrears to be credited or delays in crediting regular pension or arrears thereof. Where the external auditor is also the concurrent auditor or statutory auditor, claims can be certified by such concurrent auditor or statutory auditor. In addition to this, agency banks are required to ensure that the agency bank's internal inspectors or auditors verify the agency commission claims submitted by their branches and confirm their accuracy during the course of their inspection and audit. Reference is also drawn to the instructions contained in our letter dated November 4th November 2016 advising the process of claiming reimbursement of service tax on agency commission received for central and state government transactions centrally from Reserve Bank of India at Central Account Section Nagpur. The same process continued even after service tax got subsumed into the Goods and Service Tax (GST) framework. This process of centralized claims submission has been replaced with a system whereby applicable GST 18% at present shall be paid along the agency commission by the respective regional offices of RBI or CIS Nagpur, as the case may be. For eligible government transactions done with effect from 1st July 2019, agency banks shall submit the agency commission claims including applicable GST amount as per revised agency commission rates indicated above to RBI at respective ROs or CAS Nagpur as per the extant instructions issued by RBI. In this regard, TDS on GST shall be deducted as applicable by RBI at the time of making agency commission payment in accordance with government instructions in the matter. However, for eligible government transactions done by agency banks up to 30th June 2019, agency banks shall continue to submit agency commission claims as well as the centralized claims for ST or GST reimbursement as hitherto. Agency banks are required to ensure that agency commission claims submitted to the regional offices of Reserve Bank of India or Central Account Section Nagpur as applicable in the prescribed format are accurate. Agency banks may also alert their branches concerned to ensure that agency commission claims submitted to our regional offices are accurate. Such erroneous claims, if certified by the internal or concurrent auditors, will defeat the very purpose of making such requirement and essential conditions for making quarterly claims. Agency banks are advised to furnish their claim on agency commission to Reserve Bank within 60 calendar days from the end of the quarter in which the transactions have been conducted. If the banks fail to lodge the claims within the stipulated period mentioned above, they may forward the same to RBI only after giving reasons for delay. Penal interest for wrong claims. As per the agreement that agency banks have with RBI, violation or non-compliance of instructions issued by government or Reserve Bank shall attract imposition of penalty. Agency banks will be liable to pay penal interest at bank rate as notified by Reserve Bank of India plus 2% for any wrong claims of agency commission settled. Thank you very much for your patience.